Money with Santosh Sirur.
Hello and welcome to another episode of The Sound of Money. And today on our episode, we're going to talk about the economy, the Indian economy in particular. And we have our guest, Madan Sabnavis, who is back on with us with the next episode of The Sound of Money. Hi, Madan. Welcome back.
Hi. Nice to be back.
Yeah, thank you. And thank you for being on The Sound of Money. And Madan, as we all know, he has been a very, very experienced economist, over 3 decades of experience. And currently he's the chief economist with CARE. And of course, the very idea that we spoke to him on our first episode of The Sound of Money was his new book released then, which was Hits and Misses, the Indian Banking Industry. And we are going to talk a couple of those chapters also all along our journey on The Sound of Money. So, Madan, my first question to you on this episode, of course, is the recent monetary policy within the background of hopefully the second wave, tapering down, the economy hopefully looking, positive. We got to wait. But at the same time, talk of a third wave possible. But it looks like the government is geared up for it in some or the other way because of lessons learned. Where do you see this all shaping up towards as we move towards the second half of 2021?
I think, Santosh, when we had the second wave, the impression we get is that we were not taken as much as by shock as happened during the first wave. So I think overall business, while they have definitely been impacted quite perversely on account of a series of lockdowns, which are still in progress in almost all the states. But I think the fact that they had to adjust to this kind of new surrounding was not really new. And I think there's been some bit of adjustment which has been made. And also the fact that the lockdowns were less severe because they didn't come at a national level. There was still a case of saying that people were allowed to move around the country. Goods could definitely move without any fetters. Whereas individuals, of course, there were individual states which put certain kind of restrictions. So I think the overall damage which has been done to the economy has definitely been less severe than what we had seen in the first time. Now, this said, it doesn't detract from the fact that almost all economists in the country, including the Reserve Bank of India, have scaled down the expectations of growth. So here we are talking of something which began in a double-digit range. Like we ourselves at CARE Ratings had a figure of 11.2% before the financial year began. And today we are talking of something closer towards 9%. The RBI started off at 10.5%. They're talking of something like 9.5%. So I think there is a belief that the economy has been affected. But there's also some bit of optimism that things may not be very bad because we're coming towards the end of the peak of the second wave. And things could only get better from here on. But whether it happens in August, that is what our conjecture is, that things will return to normal in August. Maybe some people have an assumption it could be in July, it could be probably in September. But definitely in the second half of the year, things should look better than what they are right now.
Yeah. So what really coincides with the second half of the year is the monsoon. And the weatherman so far has been predicting pretty positive about the monsoon. That really makes a lot of difference, right? That's one. And the second thing I think is the second wave, as you know, had a lot of impact and a lot of COVID cases in rural India. Now that is worrying compared to what it was in the first wave. So if you look at the rural cases and of course the hope about a very positive, good monsoon, do you think the economy really kickstart the way it could have as expected?
Personally, I feel, Santosh, that we have to be a bit guarded on this because there was quite a bit of euphoria. Maybe that's the way it was projected, that very good monsoon maybe will be slightly higher than the normal monsoon. But that's only one part of the story. And I think what you've pointed out is absolutely right, that the virus this time has penetrated the rural areas, which were largely unaffected last year. So I think that's the big difference. And the sad part is that we're not quite sure about whether the numbers are right or wrong. Okay, so because of the fact that if you go to, you talk to people who've had exposure to rural areas, which I've been doing, and the impression you get is that lots of people out there are not aware of whether they have COVID or not. You get infected, you're not quite sure if you can be tested because you don't have the testing facilities. And it's probably only the last stage where things get critical that the person is actually shifted to the urban areas and then there is some treatment. And then if you're lucky, you survive. Otherwise, you don't really do survive. So I think these kind of stories are in abundance. So therefore, we're not sure about what the true picture in rural India is. But my sense is that it's definitely more severe than what it was last year. And that could actually have a bearing two ways on this entire story of revival of economy we're talking of. First, I think in the next couple of months, especially June and July, which is the sowing season in India for the Kharif crop, I think we'll get to know whether there is enough labor which is available, because that's the first pain point which could be there. If people are infected, you may not be in a position to actually do the kind of sowing which is required. The second part is, of course, even in case the sowing goes on target, there could be an issue in terms of whether the rural demand story will work out, even in case I have a good Kharif harvest. Yeah, earlier we used to always say that if you have a good Kharif harvest, farm income goes up, you will be spending it on industrial goods, and therefore you're able to supplement whatever is happening in the economy in the urban India. But this could, of course, be questioned because we know that every individual in this particular country has been spending more on medicines, more on healthcare. Even if you're not infected, all of us are spending money just taking preventive medicines to make sure that we don't catch the infection. So if rural India has been affected and people have been hospitalized, people are spending a lot on health, then there's a possibility that your overall consumption power is going to come down. And the kind of discretionary spending which we normally associate with the harvest, post-harvest and festival season may not quite work out. So I think one has to wait and watch about whether the sowing goes on target. And the second is whether the higher income will actually lead to higher spending, will it actually lead to more discretionary spending.
Okay, so Madan, I have one very important question for you, and it's about the economy, right? If you look at it pre-COVID or just about the budget of, I would say, early 2020, at that point in time, the economy wasn't doing well anyways. So the full focus was how the government will kickstart the economy, revive the sector, especially it all the talk around the auto sector, etc., etc. But now, again, with COVID, now the whole base effect seems to be about COVID and then on what, right? So is there a paradigm shift in the thinking of the government within COVID could be the base and then it kickstarts, or could policies be all around it? Do you think so?
I don't think at the centers level we have seen any steps being taken, because I think the view which is taken is that what we're seeing today is transient in nature, and that's not going to have a deep lasting impact on the economy. So, okay, the RBI officially has lowered the growth estimate to 9.5%, but this we all know comes over a negative 7.3%, which means we actually went down. Now we are probably coming up, and it would tantamount to nothing more than maybe 1.5% growth over 1920. So it's not really significant. But we haven't seen any affirmative action being taken by the central government, because it's generally believed that the lockdowns have been imposed by states. And if at all there's any relief, any revival steps which have to be taken, even if it comes from the budget, it'll have to be done by the state governments. So there's been some talk of saying that the states should be spending more on capex, and probably the kind of buffer which has been provided to them in terms of the higher fiscal deficit, which can go up to 4%, can be used for this particular purpose. But I haven't really come across any definite plans in terms of the government spending at the center more money in order to revive the economy. Because it generally felt that, okay, 9.5%, 10.5% doesn't really matter. Now that the fact that we are away from the peak of the infection and things are only going to start improving from now onwards, will probably reinforce the spirit that we don't have to really do anything more. So in my mind, that's a fairly laid back vision which has been taken, because I think a lot needs to be done at this particular point of time, especially for certain sectors in the services sector. Okay, because if you're looking at this lockdown, if you look at services, you look at tourism, look at hotels, restaurants, entertainment, retail malls, I think these services have actually been shut for 2 months, and we're not quite sure when they're going to open. Even in a state like Maharashtra, where I stay here in Mumbai, there are different categories which have been drawn up, what can operate in some districts, some which cannot operate. So I think it's going to be very painful for services, and given the fact that services are the driving force of the Indian economy, having a share of around 60 to 65%, I think something needs to be done there. RBI has done something in terms of providing a line of credit for 15,000 crores, especially for the hotels and tourism sector. Whether it's enough, I'm not quite sure about.
Okay, the RBI monetary policy announced, it's very accommodative, and it still continues to be accommodative stance. So I think, do you think pump priming is really the way out eventually, and it's deficit financing, and that's the buzzword, because otherwise the economy is going to be very difficult for the economy to really kickstart in its right way?
No, you're right, Santosh, because when we talk of RBI doing anything, it's more on the supply side. It's a case of saying, I'll give you funding at a low cost. Now, the question is that are banks willing to lend? It goes back to the issue of saying that under these circumstances, banks would be cherry picking their customers. They will not be universal in terms of lending. Second, are you willing to borrow? So if I look at the SME sector, which has been buffeted for the second successive time, we have seen that the SMEs today may not want to borrow money. Because I'll take you back to the last credit policy when they had this concept of SLTRO, where the small finance banks were provided with funding at the repo rate. 10,000 crores was what was allotted for it, and not more than 400 crores was actually subscribed by banks. Why? Because they don't want to lend, and there are not enough people who want to borrow. Because today, if an SME is not allowed to operate, why should I be borrowing money and take on debt? So I think that's the basic issue when you're talking of supply side incentives. I think it's right. We need to see a direct impetus coming from the government. And I don't think the government is in a position, based on its ideology and the talk which has happened so far, to actually give cash to all of us and say that, look, I'm cutting taxes so that you have more consumption power. But there's always this fear that if they cut my tax, I may save the money in these uncertain times. So I think the only thing is that you need to spend more. Bring in your project expenditures, start spending immediately, because the moment you start building more roads, automatically is demand for cement, steel, all the other material which goes into it. Those industries revive. They will be employing more people to make sure that the production keeps pace with the demand. I think that's the kind of a virtuous cycle which can be created. So the important thing is that whatever has been allotted in the budget should be spent immediately. And if necessary, you probably spend even more. It should be done by both the center and the states. I think the center has probably kept its commitment even last year for capex, but we haven't seen the same thing in terms of states which were pressurized and finally cut back on discretionary spending.
Okay. What about NPAs? Do you really see any concern on the NPAs? And more so, if you recall, in April, May, you have families affected big time, right? People passing away, close relatives passing away. Overall, it was a gloom and doom kind of a situation. And this is the most important point is this is something where it hit everyone's heart. I think there is no family today who has not been, hearing of a bad or a sad news each day. So do you see NPAs a genuine concern?
I think this is something which has been mentioned by the RBI even in the policy when they're talking of banks making adequate provisions and creating capital buffers. My sense is that NPAs will definitely increase, but it may not be seen in large industry. We're going to see a lot of pain in the SME segment. Now, you should remember that a lot of the SME loans have been restructured. And even today, I think in the last policy yesterday, they had also mentioned something to the extent of changing the limits for the loans which can be restructured for the SMEs. So we won't get the exact picture in the current financial year. But I think the problem will really start after a couple of years when the restructuring plan comes to an end. And at the end of the day, the SMEs have to repay it. Similarly, as you said, there have been a lot of retail loans which have been given. And I think that's what has driven bank credit last year and even in the previous year. So when we are talking in terms of families being affected, people being out of employment, especially at the lower income groups, affordable housing, we have taken loans for it. I think there will definitely be a lot of pain when it comes to NPAs, something which the banks are also cognizant of. So my sense is that it could probably be higher by at least 1 to 2 percentage points based on the current number, which appears to be in the region of around 7.5 to 8%. This is just a pure COVID impact which is there. If I take you back to what the RBI had, of course, spoken of something in the region of 13 to 14% in September as the worst case scenario under stress conditions. I'm not even looking at that kind of a dreadful situation. But I think the underlying NPAs, which will probably surface not today, but maybe after a couple of years when the one-time restructuring comes to an end for the SMEs, could be another 2 percentage points higher than what it's today.
Okay. I have one last question for you, and that comes around from your book, right? Hits and Misses Indian Banking Industry. When you released your book, it was around February of 2021. And when you see it now, is there any chapter that you would like to revisit from a banking standpoint and the impact or the effects of COVID and et cetera, et cetera?
No, actually, I would say that there has not been any significant change overall in the banking stance. And I think a lot of things have been deferred for the time being. So, for example, when we have spoken of privatization of public sector banks, something which is also mentioned in the budget, actually, we all know that certain banks are going to be sold in the market. But I don't think there has been any attention paid to it right now, because I think the pressure is more on trying to make sure that we are able to control the pandemic right now. Similarly, if you looked at the IBC, which was one of the important things in the book which I've written, because that was supposed to be a game changer, I think a lot of dilution has taken place. Again, because when we had the pandemic, none of us really knew what would happen, how would enterprise be affected. So the same kind of stringent rules, which I have always voted for, saying that we need to be firm out here because finally we're playing with money. Okay, yeah. Because money cannot be just washed away saying that because the circumstances are bad, because finally it's a deposit holder's money which is being put. We have seen large amount of write-offs taking place continuously even in the past without COVID. So one has to be a bit careful about how we deal with this money. But I think on account of the pandemic, I think there's a lot of sympathy for the borrowers. Maybe rightly too, because under these kind of once in a lifetime kind of situation, they are not in a position to repay their loans. So I think there's been a lot of dilution in there in the sense that a lot of forbearance, we are actually deferring issues out here for IBC. So I think what I see is that maybe after 1 year when the pandemic is behind us, this is what I said even earlier, we never knew there would be a second wave. Now let's assume all of us get vaccinated and the third wave, if at all it comes, will not be as disastrous as we have seen with the second wave. I think maybe 22, 23 will be the year when we'll get to see as to what has really been the impact of the pandemic on the banking sector, especially the NPAs, what's happening to the IBC, so on and so forth.
Madan Sabnavis, Chief Economist, Care Ratings. Always a pleasure to have you with us on The Sound of Money. Well, that was Madan Sabnavis from Care Ratings. Hope you enjoyed this episode of The Sound of Money. And of course, we'll be back with another episode very shortly. But of course, do remember to subscribe to my other YouTube channel, which is TalkWriteToday, which is based on personality enhancement, communication skills, and the importance about it for students and for professionals. So always make sure you also subscribe to that YouTube channel, where I've teamed up with my friend Mayur Kalbag. Well, but for now, from the team of, The Sound of Money, that's me. And of course, Madan, thank you so much for joining us. Stay safe. Bye-bye.
Sound of Money with Santosh Sirur.